Thank you, Gloria, and welcome to our listeners all around the world, wherever you may be, and welcome to those who are here for the first time. What I want to do today is have a chat about the Australian resources sector and what's happened in the last year, right down to what's happened in the last week. Obviously, there's been a little bit of volatility for obvious reasons in the last week or two, but let's take it back a while, and we've had a very, very buoyant 9 months to 12 months. We've seen the gold price rise significantly, and that's led to all sorts of opportunities. It's led to the restart of some marginal mines because of the price being so high. It's also allowed companies to revaluate their assets and raise money from the public, the ASX, to fund their drilling campaigns. To get your share price up, you need results. And the best way to have results is to have money, because it's all about drilling. It's all about meters drilled. The more meters drilled, the more chance of success and the more chance of your share price going up. At the moment, we see a lot of companies are well cashed, and we should see a lot of very interesting results come through in the next 6 to 9 months based on the cash at bank as of the quarters. What I'd like to do is to talk about the mood. A year ago, the mood was quite down. There was no IPOs coming through. There were limited capacity for raising money. And then all that's changed. Someone flicked a switch and we're on. Money's being raised, everyone's buoyant, everyone's drilling. At the recent RIU Explorers Conference in Fremantle, one of the largest conferences in Australia, I got to spoke to over 100 of the companies, and they all told me the same thing. They're so looking forward to the next year and so looking forward to the opportunities that are going to be presented to them, and they are finding out from projects, not just in Australia, but also all over the world. So project acquisition or project identification becomes a very, very key part of their day-to-day routine. Obviously, they have their own projects currently, but they're always looking over their shoulder to see what other things can come their way where they can take advantage of. The conference also spoke about the mood, and one of the Canaccord advisors said that he's never seen it so buoyant, and he thinks that we're in for a very, very strong few years. Of course, all that was true until 2 weeks ago when the Middle East conflict, and that's put a bit of a dampener on people's mood, and people's are now hesitant to spend at the moment because they just feel as though they want to watch what's going on and maybe allow it to settle before they move in their next direction. Investors in stocks, the people at the end of the queue, people who are spending their money, are just not spending at the moment. Your cash at bank is king, and they probably won't come out and invest in stocks until a little more clarity is around the Middle East, and perhaps an end date or an ending date is closer on the horizon. My personal opinion is when that is settled and done, they will re-emerge, because the share prices have all gone down 10%, 15, 20% in the last week or two, which provides massive opportunity for the Australian industry. So I think we'll see slight hiccup, and then we're on again for the buoyancy of a very strong market. Ladies and gentlemen, what I'd like to do now is to introduce someone to the discussion. He's a well-known mining promoter. His name is Morgan Barron, and Morgan has had over 25 years of experience in the ASX listed company market across a broad range of sectors. He has been involved in numerous capital raisings, corporate restructures, mergers, acquisitions, divestments and recapitalisations. Corporate skills include broker and stockholder engagement, commercial negotiation, acquisitions and diversities. Mr. Barron has experience across all of the commodities and minerals, but recently being involved in transactions as iron ore, lithium, gold, antimony, nickel, tin, copper, silver, potash and rare earths. I have asked Morgan to give his opinion of what I've just spoken about, and he'll probably do it in a little more structured way by going through half a dozen or so topics one by one. So it is a great pleasure. I now introduce to the microphone Mr. Morgan Barron.
Thanks, Stuart, and thanks for having us, Gloria. Over the last sort of 3 to 6 months, the Perth-based investors and ASX have had a front row seat to a very dynamic few quarters, with much money being spent on exploration and finding resources. The Australian resources on ASX is relatively complex, but especially in WA, we've demonstrated remarkable resilience. This has been elevated by good commodity prices, a strong haven. Australia is a good investment destination, and with structural electrification and AI demand, there's been some interesting demand and flow through into the critical minerals sector. So overall, the last quarter has produced some record outflows into exploration, and you'll see that in the upcoming quarterlies and Appendix 5Bs, with all the drillers being really busy drilling away, finding more resources. So breaking that up, let's go into some various commodities to give you an overview of the junior ASX companies. So there's 750 juniors on ASX. Let's look at probably the strongest sector at the moment, obviously with gold. So WA gold sector has been undisputed the star of Q4 2025 and Q1 2026 to date. It's record Australian dollar gold prices have been outstanding, and there's been record amount of exploration spent on this sector, with lots of new deposits, lots of new discoveries, and just an amazing amount of holes being drilled. Key drivers over the next quarter, obviously Middle East tensions, persistent inflation hedging, central banks buying. We're looking at a modern day gold rush. There has been some sort of profit taking, as Stuart alluded to, over the last few weeks, but gold's certainly looking strong, with some lots of interest in this sector, very bullish, and a sea of cash that all these companies seem to have. Critical minerals, obviously we've got lithium, rare earths, nickel, antimony, vanadium. There's a lot of interest in this, especially in conflict, especially with what's happening in the US. Critical minerals are certainly an area of interest. Key drivers, obviously accelerating battery storage demand. Lithium's had a rebound, prices stabilising around 1,800 US per tonne US. There's been strong interest in the likes of PLS, Mineral Resources, Liontown, and a big rebound in this sector. Rare earths is also on the upward trend, with Lynas Rare Earths, Iluka, Indie Abbott. There's been strong interest across that sector. Nickel, antimony and others, certainly lots of interest with US stockpiles and initiatives towards those juniors. So overall mood is strong and building in the critical minerals sector. Base metals, copper, zinc, lead. Copper has led convincing structural change. Obviously we've got interest with the electrification. Copper prices hit fresh all-time highs. There's lots of drivers towards it with these AI data centres, EVs. Highlights there are obviously Sandfire, Newmont, South 32. Market favours copper, but obviously a super sector and looking for long-term exploration upside. Iron ore has been relatively strong, sitting there around the 100 to 105 US. Energy has obviously gone up with the recent crisis. Uranium, certainly positive quarter. But that pretty much rounds it out.
Okay, thanks, Morgan. Very good summary there, especially of the copper, because that's of interest to a lot of people at the moment, as is critical minerals. One thing I'd like to ask a question of you is the IPO activity in the current market. A year and a half ago, there were none on the boards and none on the horizon. I think in the last year we've seen half a dozen to 10, and I think there's a few banked up now ready to go. So that would indicate that the risk takers are back in the sector and looking to get in on ground level new floats. Is that what you're seeing? And of the new floats, are they new prospects or are they old prospects that have been rehashed?
Oh, thanks, Stuart. Good question. Yes, the IPO market has improved substantially this last 3 to 6 months. There's been a number of IPOs in quarter one, Unity Metals, Barclay Rare Earths, Marble Bar Gold up in Marble Bar. And there's also a number of ASX companies to list in the coming sort of 4 to 8 weeks. So there's certainly improvement. Some are old projects being renewed with obviously interest in gold. And others have been spun off for divestments, which are now sort of been recapitalised to as a standalone IPO.
All right, that's very interesting take there. When you have mergers and acquisitions like we're seeing now, that does lead to IPOs. On occasions, it also leaves behind a dormant company. And I guess, as you said, they can get recapitalised with new assets and have a new life on the board. One question and final question probably is rounding out, from an overseas company perspective, are there any opportunities in Australia for overseas companies to get a foothold? Maybe in a small way, to reach out from their current country and maybe have a look at Australia as a place to do business. What are your thoughts, Morgan?
Well, Stuart, I think a lot of these companies have multiple projects. They've got their lead project and then a number of non-core assets. And obviously, as commodities change, non-core become core or they get divested. There's certainly lots of opportunities as people focus and raise money and drill gold prospects or copper prospects. There are other prospects lose focus. So from an overseas point of view, to answer your question, there's lots of opportunities for companies to look at these non-core assets which could be a focus for someone else to become core. There's good examples of this at the moment with a number of lithium companies that have been spinning out their gold assets. So their shareholders, obviously lithium shareholders, gold markets progressed and they've gone, okay, well, let's spin out this gold project. So there's a couple of good examples of that. Ballard come out of Delta last quarter. There's a couple to coming up with Westgold, spinning out one of their assets. So that's a real example of how overseas companies couldn't get involved in various aspects of some of these ASX companies.
All right, well, I think we'll leave it there. So thank you, Morgan, for your time, and thank you, listeners, for your time in listening to what is a very interesting time in the Australian resources industry. On that note, I'll hand you back to Gloria and she will take it from there. Thank you very much.
Thank you, Stuart and Morgan. In recent years, tensions in the Middle East have remained high, and uncertainty surrounding regional conflicts is reshaping the global landscape of energy, mineral, and supply chains. Against this backdrop, both Africans and the Asia-Pacific regions are gradually emerging with new development opportunities in resource supply, manufacturing alternatives, and investment attractiveness. It would be great if you can share your thoughts with us, Morgan.
Thanks, Gloria. Yeah, the US-Iran conflict, which has happened since late February this year, has certainly had significant short-term volatility effects on the ASX and the resources sector. it's certainly, there's a boiling point here, and it has differentiated and could have some positive impacts on some subsectors longer term on ASX. Obviously, the likes of the oil price has had some flow-on effects on some of the juniors, especially the miners who have, petrol and diesel is a big input cost for their production. So there has been a sell-off, and we saw that late last week. But if you look at broadly, gold and precious metals, it's a good safe haven. So it's certainly overall a positive for the gold sector. Critical minerals and base metals, certainly there's some positives there. Overall, resources is certainly over the next sort of 3 to 6 months. There's going to be some adjustments in trade routes. Obviously, some supply chain shifts. We're going to look at geopolitical countries as we make investments, looking very clearly as to how this is going to affect investments over the coming quarter. And with Middle East tensions sort of driving volatility, it also could look at inversely as some opportunities for Australia and our resources sector.
Thank you. Thank you so much, Morgan, and for your input. And thank you both for your input in today's webinar.